This is James Altucher at TheStreet.com TV, and I'm here with Jim Cramer, and we're going to talk about one of our favorite topics, Warren Buffett, one of the best investors ever, and we're going to take a little interesting twist on him. Now, Jim, you were telling me offline you've done some research on his holdings.
Yeah, I mean, there's two Warren Buffetts. There's the Warren Buffett pre 3 years ago, whatever, I don't know what happened 3 years, where if you bought on the announced date what he was buying, you made a lot of money, far outperformed the market. In the last 3 years, if you bought what he bought on the announced date, you have underperformed. Now, I don't know why that is. You're tempted to say, well, that's because he's saying, listen, I want to step down and find a new guy. One of the funniest rumors I've heard is that he'll just go buy Sears. He's never bought retail other than Blumstein's, the furniture company, or Blumkin, whatever. And he seems to have lost some degree of an edge. Or alternatively, there is the possibility that he is taking an even longer term view, and you can't piggyback off his longer term view. But USG's been bad. We did a big analysis of everything in the last 3 years, and it's really been bad.
Well, a couple of things are interesting though. One is that Buffett, more than most investors, sometimes gets a special waiver to disclose later some of his holdings.
That's a very good point.
And so sometimes it's worth it.
It's like an arbitrageur's waiver. It's very strange. It only really applies to him.
Yeah, and so sometimes, like the USG is a great example where you might not want to get it the day of announcement, but if it goes down back to like 45, where he basically says he's buying every share on the market.
That's the trick. See, that's the trick. Is I think that what's happened now is you don't want to buy the day that he announces it. You want to note that he's buying it. And then if it comes in underneath, that's why I like Johnson & Johnson for ActionAlertsPlus.com. You're coming in underneath where he bought it. That's been a recipe for success.
Yeah, and Johnson & Johnson's an interesting one because it's also related to another brand new, or an addition of his in the past year, UNH, United Health. And maybe what do you think about the idea that
United Health has a lot of cash flow, and they haven't been doing a buyback. They've been out of the market because of all the options problems. I mean, UNH sells at 1 times growth rate, which it's never done. I know all the stuff that happened to Bill McGuire, and it's bad. But UNH is a high-quality company, and I think Buffett's drawn to high-quality franchises that have stumbled.
I think also he's making a bet that baby boomers are just going to need more and more healthcare services.
Also, UNH has really spent a lot of time in the last 3 years developing other less levered to managed care different solutions, including senior solutions. Now, one thing I can say about UNH, they were the winner initially in Medicare, Part D, and because of the McGuire problems, they took their eye off the ball, and then Humana came on strong. Humana right now is a better company than UNH.
Interesting.
Yeah, it's never been the case, but Humana's always been a subpar company to UNH.
Just a note, I think UNH just announced actually a buyback,
Did they?
$6 billion buyback.
Oh, good. Okay, I've been away from my desk. The one thing I would urge people to know about UNH is that the new management team is untainted. I've gone over this extensively with the management team, and the same people who told me that McGuire was tainted are swearing by this new management team. So in other words, the guys who were telling me, listen, be careful, are now telling me you don't need to be careful. And I like that, because to go against McGuire while you're there, I mean, for instance, I wanted to buy the stock when McGuire was in trouble, and I kept getting back the same call, which is that we don't know. But these guys who are running it now, they do know. So I really like it.
One similarity between Buffett's portfolio, or Buffett's historical portfolio, and your portfolio from your hedge fund days, there's always some degree of concentration in regional banks, as you mentioned in your first book.
Right.
Now, Buffett's been adding to his USB position, and I was curious if you had comments on that.
That's interesting because people think that's a second-rate bank. But I feel like that if he's involved, he's done the homework. I got the regional bank idea from the first Peter Lynch book, which is one of my absolute favorites. And when I went to write Confessions, I sought out the editor of that book. That's who my editor is, Bob Bender.
Interesting.
Because I think that One Up on Wall Street and Beat the Street, those are still basic texts that people should read.
Right.
And Peter Lynch was saying that you can add you add the book value. The book value is real of a savings and loan if it's been scrubbed, and then you can figure out that they go twice book. And I'm not sure what the book is for USB, but there's a big raid going on all these financials right now, so they're kind of interesting.
It's interesting because USB actually, and I remember your reference in your most recent book about the not buying banks twice over book.
Right.
But USB trades at 3 times over book. But one thing that probably caught Buffett's eye is they're actually declining in their loan write-offs as opposed to every other bank in the world.
I was just going over Fifth Third and Wachovia. Fifth Third, Wachovia, SunTrust. There's another one, Susquehanna. The chemical finance. It's a Michigan company, and those are all up. Everyone's loan write-offs is up.
Yeah, because all the subprime stuff.
Yeah, so that's an interesting call on USB. I'm going to do some work on that for my show.
Yeah, like all the other banks, their margin spread's gone down.
Right, but that can change when the Fed cuts.
Yeah.
But it's credit quality here that's become the issue. Before it was margin compression, now it's credit quality.
Yeah, and I think because of that, 23% return on equity, just very disciplined bank. So it's interesting. Now,
that's very good.
One other one, Ingersoll Rand, he just bought.
Ingersoll Rand was a major botch of mine for ActionAlertsPlus.com, and what I did wrong there was that I bought it near the height of the commodity boom. And Ingersoll Rand is widely perceived as being just a massively cyclical company that's levered to housing. Now, they repeatedly told me they weren't levered to housing, and then they dropped a bomb on Q4 and said they were uniquely levered to housing. So I felt that the company was not trustworthy. I sold it at 37. It's at 41. But in the interim, they've sold actually one of their best steady growers, their highway business. But I think that what Buffett sees is that they're buying in a massive amount of stock, and they're very afraid of a takeover, and their book is pretty scrub clean. Look, I was always drawn to it because of the different mosaic of businesses they have. But if you think that housing is going to continue to go down, Ingersoll's not bottomed.
Now, one more actually, POSCO, his brand new pick, Korean
Steel Company. I mean, I don't know.
Monopoly, the Korean Steel
I got to
Company.
tell you, the steel companies all trade at very low valuations. They've been very big winners. I like letter X here.
Yeah, it's interesting.
Yeah.
Now, but I guess POSCO is a little bit more tied to the fortunes of China.
Right, which is the right place to be, although I always felt that they had excess steel because of how many they bought. My favorite steel company here is Reliance, RS. It's still very cheap after a very big run.
Okay, well, thanks a lot. This
Thank
is
you.
James Altucher at TheStreet.com TV, and we've been talking about Warren Buffett.